Everyone, I want to go over what's the best thing to do right now in the stock market and my projections for the market going forward. So the best thing that you can do, especially if you've been following along with me, attending Stonkomania, Onion Trade, Forex on the news flow scanner calls, and then Cisco should be right around 4x this morning as well. So congrats everyone, is close out and then move on. Go to breakfast, go to lunch, go for a walk, go to the gym, go to the park, get away. And the reason I say that is when you're running high, when you got that cafe con leche with 10 sugars, clicking that mouse will get you in trouble. So get away from the screens as much as you can. My buddy Dennis went to Puerto Rico and then came back and did onion calls and made way more than I did, almost double. But I told him after his big week, the prior week in AMD and some other names, to get away. And I'll be in Costa Rica for a few days out there. So the best thing you can do is get away. What happens is you start getting cocky, you start getting arrogant, you start pushing some size, and then you get caught. Like yesterday, after we closed out the onion, I did a trade in XPEV, lost like 500 bucks in like 30 minutes. And I said, you know what? Time to close down shop. So best thing that you can do is that. And if you're not, here is what I'm looking for in the market, because it's a little scary, you know, overall in general right now. So let's talk about the current situation in the market. Number one, we have to look at, and we can't ignore as much as you may not be a crypto bro, is Bitcoin. Bitcoin under 100K is going to cause margin calls, liquidation breaks. Usually when that happens, investors have to sell risky assets, or risky stocks, I should say. So that's usually like the AI, the high growth stocks, because their losses in Bitcoin, they have to make up for them, and they usually sell names that have been big winners for them to make up for those losses. So the best thing that I would like to see in the market is for the stock market, specifically the NASDAQ that has the biggest correlation out of the indexes to Bitcoin, was the NASDAQ to not care what the price of Bitcoin does. Therefore, if Bitcoin goes lower, the NASDAQ can hold or even rally instead of going lower with it. That would be the best thing possible. So if we do have Bitcoin crash, you don't have to worry about it if you're a stock holder. That would be the best thing. I would love to see it. And we have seen, though, the Trump put with the stimulus. As soon as Bitcoin crossed below 100K the other day, what happened? He announced those two $2,000 government stimmy checks. It might be tax return, you know, that necessarily say you're going to get a check. Besant came out and tried to hedge and say it might be, you know, another form of the tariff payments out there. So we'll be on the lookout for that. But if that does happen, Trump checks 2.0, let's say it does, you know, happen, the market's already rallying off that news. If you look specifically at retailers, they had a big move. Look at Nike, Onion, obviously a huge one out there, but even names like Walmart, Target, Starbucks, it's going to boost the economy short term. It's going to boost stock prices because it's free money. Look what happened with, you know, GameStop and AMC and the whole meme stock craze back in the day. So it's great if you're a stock holder, but long term, what is it going to do? Well, gold and silver told you, especially these past 2 days, silver with a massive 4% rally, it's going to cause more inflation, more money in circulation. What happens? The cost of the value of the dollar goes down, hence why gold and silver rallied, and probably will continue to rally because, you know, any hard asset is going to go up. So real estate going to go up. You got an extra $2,000 to put towards a down payment to the house. Lower interest rates. What's going to happen to housing prices? They're going to go up. So is that great if you're wealthy and you own assets? Of course, you love it. If you are just getting by, you don't. You don't at all, actually. You're kind of like, well, you get a short-term high, but then that's it. And it becomes more of a wealth gap, right? If you own shares in NVIDIA, AMD, the stock market, you're going to benefit, and you have. I mean, look at the stock market up about 14% year to date. But if you're not at the top, you don't own real estate, you don't own gold, you don't own stocks, you're going to continue to get left behind. So we're seeing the biggest, income gap out there, hence the rise of socialism, especially as we saw in New York recently. So that's going to add lots of fuel to the fire, in my opinion, because you're going to have probably over the next couple of years, socialism go up and up and up as the income inequality continues here in the US. But again, great if you own assets, but if you don't, yeah, you're kind of left behind. And here's one thing that's a little scary to me, just personally, that I don't know when it's going to hit. I'm not calling the stock markets in a bubble. In fact, I think the market rallies up until OpenAI goes public. And full disclosure, I'm an investor in OpenAI. So I do think we see AMD, NVIDIA, kind of the whole gang, so to speak, of AI continue to rally until OpenAI goes public, which is looking like late 2026, early 2027. And AMD, I mean, their CEO in the conference, sent the stock up, 9% this week. I mean, it's insane. And you still have NVIDIA earnings in a couple weeks. So be on the lookout for that. You got about a $25 implied move. But one thing that is scary, and we could see some bumpiness in the stock market road, is the credit crunch. People being over leveraged, and if stuff hits the fan, is that going to trickle down and roll over and have an effect in the stock market? And here's what I mean. I'm at the car wash the other day. The guy working there says, "Hey, I like your truck. Seen it a few times here, and I just pulled the trigger and bought one." I said, "Oh, sweet." He points to it. He goes, "Yeah, it's over there. I got that. I got the running boards, got the top cover, blah, blah, blah." And I go, "If you don't mind me asking, how much did it cost?" He said $82,000 for a pickup truck. And I was shocked, because 3 years ago, I bought the same truck, same model, everything, for about $20,000 less. And I didn't get any discounts, nothing. And I'm thinking to myself, holy crap. If the cost of vehicles is up that much over the past 3 years, this is insane. For the same model, everything pretty much the same. And then I thought to myself, if someone is working at the car wash and they're financing an $82,000 vehicle, what happens if we continue to see people get unemployed? If we continue to see layoffs in companies? If we feel a recession like some people are already calling, especially in the lower to middle class, then what happens? That's a little scary. If people can't pay their car notes, if people can't pay their rent, if people can't pay for cost of living, and we're already in the most debt ever, and the credit card companies obviously are loving it, what happens to the real economy? Not talking about you who's, own stocks and gold and assets. What happens to normal people, and how will that affect the market, or will it? I don't know, maybe it won't even affect the market. But I did think that was a little concerning, and it's not the first time I've heard this recently. And with lower rates, people are more open to finance these higher costs, because lower rates, what's going to happen to the price of the asset, it's vehicle, real estate, whatever you want to call it, it's going to continue to go up in price. So hence the bull case for gold and silver, obviously. But I was thinking, man, the real economy is not the stock market. It is really not. So yes, we are riding the sugar high of the market. I'm not saying the Kool-Aid is going to run dry, but at the end of the day, you always have to think like a market survivor, so to speak. You're on an island, you're surviving, you just have a little stick where you have to hunt your food and cook it and survive the weather conditions, right? We always have to think about risk management. That any day we can wake up and it can flip and you can see the market down, limit down any morning, and it can continue. The VIX could go from 17 to 50 in a flash, or to 100 in a week. This could happen, and I don't want to just be, green, so to speak, and say, yeah, everything's going to be great, and we're not going to see the ups and downs of the roller coaster of the market. So, yes, everything is good right now. I get it. If you're running hot, take a step back, take some time off. If you're not, maybe maneuver small. We're going into the holiday season. We're probably going to see a rotation to a handful of stocks Thanksgiving week. Could be NVIDIA, AMD, Tesla, Microsoft, you name it. That usually happens in these low volume weeks, same with Christmas and New Year's. But I also want to be aware there's risk involved in the markets out there. And when we're walking on eggshells in the real economy compared to the stock market, I do think it is smart to be nimble. Don't get married to any position. Don't go all in. Don't get over leveraged out there, that's for sure. And always do a limited risk. Hope the video helps. Let me know what you think of the real economy compared to the stock market and your predictions for gold and silver over these next 12 months. Make sure you like and subscribe to the video too.